the April 9th big move that we saw, the big outside day. So, everything is moving in the opposite direction for the U.S. markets right now still. We see gold still moving to the upside. The dollar is still relatively weak. International bonds, if you look at the developed market bond market, that has been moving to the upside, and that's contra to the United States. So clearly there's capital outflow from the United States still into the developed world, which again, if you look in the context of potential reversals of all that financial capital, that could be very strong for U.S. markets. So volatility measures, if you do consider looking at the VIX, which is really a 30-day volatility measure relative to the 9-day volatility. So just going out 9 days in terms of estimates, there's still a much higher implied volatility 9 days out than the 30 days. So that implies in the near term, potentially we have another sort of volatility event, perhaps retesting some of the lows we saw back on the 7th of April. But all can change on a dime.
What's happening with the market?
Some policy relief.
Gold is up.
Either from the Trump administration or even potentially some language change by the Fed.
Some of the concerns, and I know you're watching the euro. We just finished talking about the strength in the yen recently. The U.S. dollar is still below this 100 mark. In perspective, Kevin Hanks was noting how we've been in the 80s. It's not that terrible. But some folks noting that the dollar's drop is unusual in the correlation that we're seeing with bonds.
Subscribe, give like,
bond yields rising and the dollar
see you next
dropping.
live stream.
What do you make of that, and what do you think about the euro today?
Well, I think, looking at bonds, obviously